Good evening, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for a pretty active trading day today on this Monday, the 21st of October, 2024. You know, you're 15 days away from the U.S. presidential election. That didn't go by me over the weekend. I've been looking to see which markets that I want to do a report on that has to do with the election and what impact the election has on that market. So what I decided to do over the weekend was do a report, and let me show this to you, on the dollar, the U.S. dollar index. And instead of doing bar charts of monthly, daily, or weekly, didn't do any of that. I went right into how does the market do exactly pre-election, post-election on U.S. presidential elections, not midterms, but those. I wanted to shorten it, widen it, and see what the differences are, what happens in this 2-week period leading up, what happens right afterwards, then the post period, which is a little bit longer, and then what happens in the month of December as we get into year end. Now, history doesn't always repeat. I know you know that. You better, because otherwise there'd be billionaires on every block. You just say, well, this always happens. But the fact that we look at something and we've got this much history gives me an idea. And if the chart action verifies that, well, that's how you make your moves in the market. And I certainly did that Sunday night for a lot of my traders as we took some positions. And I'm not going to tell you in what markets, pro the dollar or negative the dollar. I'll just say that we did that. So if you want to see this report, it's only up for 3 business days. Today's the first business day. It'll go off at 11:59 p.m. on Wednesday. You go to iraepstein.com, and on the very top left, you can't miss it. It'll be there in big green for you. Dollar index report, the currency report, or you can move your cursor up here at any point. You'll see an icon and take it from there. Now, in terms of news right now, let's go to the news instead of the chart. I went a little bit off. There we are. You're going to get the Red Book retail sales. They really don't move the market much. You've been running about 5.5% increase week over week, and keep that in the back of your mind, and versus a year ago, too. The Fed will update their monthly manufacturing sector index for October, and that'll get a bit of attention. It was terrible when we looked at September's. That was negative 21. Is it going to be just as bad, or are we going to see something better? That'll be the important part that we take a look at. So you're in the big earnings week. This is the big boy, all right? 20% of the S&P reports this week that we're in. So you're getting all kinds of reports. I can tell you that about 80% of the companies so far that have reported, it began a week ago when we got the big banks, if you'll remember, reporting, about 80% are beating. You're already hearing the market talk that, if you go out from this point after this year forward, the average gain will be 3 to 5%. Let me share with you. I don't think anybody knows what it will be, but it gives you an idea maybe for some prep work. And you can't keep these type of gains going forever. I think you realize that. And I think you do realize, I hope you do, that this market has been carried in a monster way by big tech. I mean, NVIDIA, another new all-time high. Look at where it closed, literally on the high, all right? So that is a market that if you're with me on my morning Spider ETFs, you're in that particular trade. Amazon, they tried to bury it today. It came right back at the marketplace. Now, I'm looking Home Depot down, Restoration Hardware I'm keeping an eye on. I think that you're going to get big business coming out of those markets as the rebuilding of the South has to take place with the hurricanes that went on. But what's hurting the market right now, and you have to play the cycle, is interest rates. And interest rates have gone up ever since the Fed. Now, listen to what I said. They've gone up interest rates since the Fed cut by 50 basis points the short-term rates. What's going on there? The market had rallied and taken rates down in front of the Fed. Then when the Fed made the cut, the market had already, it was buy the rumor, sell the fact, gone the other way. Well, we're all of now 2 weeks away from whatever the next Fed action is going to be. We get the Beige Book coming out this Wednesday, I believe. start getting ready. You want to pay attention to all this as it starts coming out at you. See where the members were. I know that if you have another strong jobs report, I'm in the camp the Fed doesn't have to cut it all in November. I realize traders want them to do it, and I realize the bets are that they will. Doesn't matter to me. The Fed will have to do what it does, and if the data stays strong, they can afford to wait. Am I betting on that? I'm not betting on anything right here. I want to make that ultra clear, so don't say, well, you said. I'm not saying anything. I'm saying I haven't made my decision yet. I'll let you know when I do that. I was wrong on the last one. I thought they should have gone 25. They went 50, and I think they regret it. I think if they had to pull it back right now, they'd have gone 25, and you'd get another 25 in November. Now they have the problem of saying, well, you went into after the election, you tried to smooth things, blah, blah, blah. I don't know what they'll do. When we look at DWPCF, this is a very interesting chart because it's a compilation of mid caps, bigger caps, everything. It's quite interesting. This is what it does. It represents the performance of the broad U.S. equity market, including large, mid, small cap stocks, as a completion index that includes companies from all sectors of the country. So what I'm trying to do here is see what the bigger markets are doing. We'll look during the day every now and then at RSP. You know that, instead of just the S&P. So I'm seeing the correction setting in, but the market is bullish. You've got higher lows, higher highs. The market's well over support, which is the 18-day average, which is about 30 points lower, 2179. Let's call it the 2180 level. I'm looking at a market that ran the upper Bollinger Band, started faltering against it on Friday, and today gave you a correction. But I'm also looking at a market that's still embedded. So tomorrow the key is, when the market reopens, there's going to be pressure on that red line to get underneath 80. If there isn't after it reopens, then the trade probably nibbles at that market to see if it can hold and reverse back to the upside and keep the embedded reading in place. If the red line closes under 79, then I'm in the camp that thinks the market will go to wherever that 18-day average is. That number will climb a little bit, because if you take a look, the day before today, it was 2176. The day before that, 2172. So roughly 3 points a day that the market is going. So that number tomorrow could be closer to 2182, 83. Okay, we'll see what the market does. In Rivian, you might drop to this lower band at 969. It can't get out of its own way here. Did it embed yet? Both numbers are under 20 on this. Let's see what the next day is. Both numbers were under 20. What about the day before? Under 20. So you have an embedded reading. The only thing that gets this market bullish now, in my opinion, is if the market gets a bounce and loses that bearish reading. So I am not in the bull camp on this. I think you might be going down to the 969 level. When we look at CrowdStrike, we have a market that's got higher lows, higher highs. I've been saying when it was up here, I started saying I think it'll pull back at a minimum into these two averages and possibly back to the 18 to regroup. It's too overbought. It's had a heck of a run, but I don't think you're coming back down to these levels and this disaster level. Remember what the Delta story and all happened there. In uranium, be careful here. You had 4 days in a row over the upper Bollinger Band. You're ready to pull back. You rarely go 7. You still have the embedded reading, and no, that is not a bear warning from me. It's just that I think you're going to cross to the other side. You'd have to get the red line under 79 for me to think you got more of a correction coming. I'm not seeing that yet. Then we go to KWEB. And as you know, over the weekend, well, you may not know unless you listen to me in the morning today, that China took 2 of its key interest rates, I think it was the 1 and the 5-year, and they cut them both by 25 basis points. The market had thought they would do before the end of October by 20 basis points. We didn't know when they would do this, but they elected to do it now, and 5 basis points bigger than the market thought. That's not really a big deal. What the market's waiting on is to see that the spending policy takes place as China has said. It is not in place. what's in place is the monies that they've said they're going to commit for their bazooka part to get the economy going, but they have not come out committing it. They're being very tepid about it. They could do it before the end of the month or early November when one of the committees that's from their from when they put in their commission, their Politburo, I believe it's called. A subcommittee comes out at this time and they decide how the monies are going to be spent. You need the money spent in local communities. You need to see them have a way to pay off their debt burdens, to refinance their debt burdens. If you can't sell property, those communities were built on property sales. And if property's not moving, and it's not, it's crashing still in China, you've got a problem. So we'll see if China addresses it. I also rarely believe the financial numbers that they give us, because as soon as they're bad, China has a way of saying we're not going to publish those for a while. It's a very cool way to run it. In Toll Brothers, higher interest rates, we talked about they might weigh on the market because we were looking at that happening in the Home Builders Index, and if you take a look at this, you can see the market's right back down. You know, you've gone back from the 3.6 level approximate in the 10-year note, and remember, mortgages look at that, to 4.13. So your 6.5% mortgage looks cheap right now. I know that sounds crazy, doesn't it? But it's looking a bit cheap because you're climbing in rates again. In the financial service sector, interesting that rates are still going up and now you're starting to bend over a little bit. You had gone up all the way through. The higher rates were making banks money again, and that got everything going in that sector. Is the market trying to tell us that maybe we're coming to the end of this rise? It just could. So pay attention to what's going on there. In XLI, the industrial sector, well, the one thing it's doing is it's walking away from the Bollinger Band. It's certainly not in the bear camp. Maybe it corrects down to the 18-day average if, three ifs, if this number ever closes under 79. Until then, the trade is buying this market on breaks. They'll bail when that occurs and say, okay, this run-up from right here has run its basic course, but you can come back further. You can argue that it began here in August, and it began at a level, what, in the 122 level, and you've gone up very nicely here into the 138s, 140 zone. In the energy sector, I'm still not buying anything. All right, to me, the energy's got a problem until China comes alive. You need Chinese demand, and I don't see it. I see China trying things at the fringes, each side, but instead of going right into the center and throwing the money at the problem, we'll put the money here, we're going to do something, we'll let you know when we're going to do it. That's not enough to do that. And how many times do you want to be scared of Israel going to do something to Iran? When it happens, whatever it's going to be, all right? And I don't know what it's going to be. Obviously, the fact that over the weekend, 3 drones were sent to try to take out Prime Minister Netanyahu, and I understand one of them did damage to his house. Now you got a different game. So now Israel's got to hide its people as other people are doing it. I wouldn't want to be in the Middle East for anything. No vacation time, no anything. Higher lows, higher highs, over the upper band. Nah, I don't think traders buy over the band, but did I write a bullish silver report? SLV, I think I did a week ago, and it's done its job. I'm not always right on those reports, folks. Some of them I write, and I wrote, how could I have seen that so wrong? Lower highs, lower lows, still can be coming down in the copper. Again, I can't get friendly copper until China, 50% of the world consumption goes through them when they're operating. That's what I need to see. Right now, everybody's trying to kickstart their economies to get the demand by cutting interest rates because the economies, the demand isn't there that big. Got it? So you got to pay attention to that. BND and TLT, they're getting smashed. You got to come here. Remember when the market was running up from the Fed? This is that point. It's an inversion market. The higher you go, the lower interest rates are. Take a look what happened. You gave everything back. If you look at where some of the bonds are, the 10-year, I think the day before the cut and where it's at today, you've actually now higher yield intraday. Dollar index, it's looking at that. It's saying U.S. economy is still firing on 8 cylinders. U.S. economy has higher interest rates. They're wobbling. Are they even going to have to cut interest rates? A lot of people like me talking about that, and others, and Fed members, and that gives the dollar a bid against most of the currencies. And the ones that are saying, we got to cut, we got to get Germany going, got to get the other parts going, they're under the selling pressure. It's not a difficult game to figure that part out. Catching it is always difficult, and that is the key that you look at. So I want to remind you, take a look, if you would, at the currency report and the other information on our website, iraepstein.com. You can move your cursor to the top here. You'll see an icon. It'll be there for you as well. And I'll catch you all in the morning. Take care.